Hi everyone, welcome back to Corporate Decoder. Today we are diving into the latest report from the York Water Company, and trust me, what are you going to say when you hear about these numbers? We are going to go through this report to see how they are performing and if this company is all wet or a pure stream of value. This report is a look at how the York Water Company did in the first 3 months of the year, ending in March. We'll break down the key numbers and what they mean for this Pennsylvania-based utility company. If you like getting the story behind these filings, make sure to hit that subscribe button. Also join our Discord community linked in the description below to discuss these reports and maybe grab a glass of ice water together. The York Water Company has been around for a long time, since 1816. They provide water and wastewater services to a large area in south central Pennsylvania. Because they are a utility company, they have to file these reports with the Securities and Exchange Commission, or SEC, so everyone can see how they're doing. Let's dive right into the important stuff, the numbers. First, their accounts receivable. The money owed to them by customers is around $69 million at the end of last year. This is the same value as Q1 last year, which is pretty decent and not alarming. Now let's look at the big picture, their net income. This is what's left after they pay all their bills. For these 3 months, it's $306 million. Unfortunately, that's less than the $4.3 million they made during the same time last year. Another key number is earnings per share, or EPS. This is how much money the company makes for each share of stock. Their basic EPS is $0.25, which is also down from $0.30 last year. Now let's look at their long-term debt. This is money they have borrowed that needs to be paid back over a long period of time. That number is about $211.6 million, up from $205.66 million at the end of last year. So what's behind these numbers? Well, operating revenues, the money they bring in from selling water and wastewater services, went up to $18.5 million. Last year it was $17.6 million for the same period, so they are earning more. But their operating expenses, or the costs of running the business, also went up. They spent $12.2 million compared to $11.4 million the previous year. This is due to higher depreciation, maintenance, and water treatment costs. Interest on their debt also increased, costing them $2.4 million last year. This is because they have higher interest rates on their loans. One thing that decreased was allowance for funds used during construction. What a mouthful. Basically, this is a credit they get for building new stuff. It went down a lot. The company says the reason for the lower net income includes this decrease in those construction credits, higher expenses, and higher interest on debt. This was partially offset by higher operating revenues and lower pension costs. What else is important? They issued some common stock, basically selling shares in the company, and they declared some dividends, which is paying out some of their profits to shareholders. Now let's talk about cash flow. This is the amount of cash coming in and out of the company. They talk about this in terms of operating, investing, and financing activities. Their net cash from operating activities, so their profits from actually selling their services, was about $6 million, nearly the same as last year. But here is the thing, their net cash used in investing activities, such as investing in equipment and other assets, totaled around $9.3 million. And the net cash from financing activities like borrowing money and issuing stock was about $3.3 million. The company has some loans. They talk about it in terms of a few different series of bonds. This is all money that they need to eventually pay back. They also use something called an interest rate swap agreement. They're trying to control interest rate risk on some of their debt by swapping variable interest rates for a fixed rate. But the value of this agreement changed a bit during the quarter. They have to value all their financial stuff, like their debt and that interest rate swap agreement we mentioned earlier. They put these things into different levels from 1 to 3, depending on how easy it is to find a price for them in the market. Their interest rate swap is at level 2. The company has some commitments, including replacing lead service lines for their customers. This is costing them some money, but they plan to recover those costs in the future. Their revenue comes from a variety of services such as utility and wastewater. They get their rates set by the Pennsylvania Public Utility Commission, or PP. The rates are very important because it controls how much they can charge. And the PPQC lets them add a small charge to customers' bills called the Distribution System Improvement Charge, or DSIC, to help pay for upgrades. The company also has pension plans for its employees, and they are required to contribute. Lastly, they have stock-based compensation where they give company shares as a way to pay their employees. This incentivizes them to work towards the company's success. The report says that no director or officer of the York Water Company adopted or terminated a Rule 10b5-1 trading arrangement during the quarter. Basically, this means they didn't set up any pre-arranged plans to buy or sell company stock. The company talks about managing its cash. They say they rely on a line of credit and think they will have enough money to cover their expenses for the rest of the year. Water companies need to pay attention to the environment. The company has approval to replace lead service lines and is keeping an eye on drought conditions. I give now my take on all of this. The York Water Company looks pretty solid. They provide essential services, meaning people always need water and wastewater services. The York Water Company has a credit rating of A with Standard & Poor. A solid credit rating can give investors comfort. One of the things the company mentions in the income tax sections is the amount they claim to deduct for improvements, which affects their income tax rate. It would be more beneficial for York Water to deduct and not depreciate these. While profits were down this quarter, most of this stems from timing problems. With a stable, even old company like this, those are bound to even out as they have always been doing. For any small investors here or bigger ones, it might be a good consideration. As always, do your own research. Alright, that's our breakdown of the York Water Company's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.